Hi, my name is Jeremy Awori. I'm the Chief Executive of Barclays Bank here in Kenya. Today we had a really exciting and interesting talk about mortgages, and there were lots of great questions raised around the mortgage business in Kenya. From my perspective, I think we're at the early stages of the mortgage business, and that represents a really exciting opportunity. We've got Kenya, which is growing, the middle class is growing, the economy is growing. Historically, there have been shortages or gaps between supply and demand of properties available for people to buy, but increasingly that is being addressed with more properties coming onto the market. So when we look at banks and our role that we can play in the mortgage market, we are very keen to have clients owning their own homes, achieving their dreams. But the reality around that is there are things that have to take place for that to be able to happen. The other thing we are looking at, which came up considerably during our talk today, was around price and the interest rates and repayment rates that apply for mortgages. And I think for this to happen, one of the challenges that banks face is really around the funding mismatch. Customers come and they bring us deposits which are typically short-term in nature, less than 1 year. However, the funding for a mortgage is often a 20-year undertaking. So that funding mismatch has typically been a challenge for banks. But I think banks now increasingly are looking at different ways to manage that. And I think we're going to see, as the capital markets evolve, going to markets and actually looking for things like issuing long-term bonds, which will give a bit more predictability, both from a bank perspective and from a client perspective. But one thing that I do want to mention with regards to the overall interest rate that is charged, this rate is largely affected by the risk-free treasury bill or treasury bond rate. The mortgage rate will typically never really be below that rate. So what we need to see for mortgage market to really pick up is we need to see overall interest rates coming down. Now those are affected by macroeconomic conditions and the environment in general, which is affected by inflation, government spending, among others. So while banks have a responsibility to manage their efficiencies and manage their operating costs and manage the simplicity around supporting clients to actually come and apply for their mortgages, there are factors outside of banks' control that do affect the overall rate that is applicable. What I would also see is that customers should consider, it's important that people get onto the ladder of owning a house. I think once you get onto the ladder and you build a credit history, as your career progresses, as your income grows, what you will find is that you will be able to trade up and live in your more aspirational house in line with your growing income and the different lifestyle that you're living. So it's not about moving immediately into your complete aspirational home. It's more around building that credit history and showing that you are a good credit. And that will flow through into the absolute price that you will be charged, because somebody who pays well every time, every month, should typically be treated differently than somebody who does not and has a poor credit history. So I think we're in an exciting time. I think there's lots of opportunities. We as banks are committed to growing this segment, committed to seeing this as an opportunity to allow our clients to be able to move to their aspiration of owning their own home and living in their own home. Because this is the single largest investment that you're likely to make. And we're here to partner with you to try and help you make the right decision in a way that you can afford and in a way that allows you to live the lifestyle that you really aspire for. So thank you so much today for such great questions. I found it really a great experience. I hope we managed to answer the questions well for you, and I thank KBA and the online chat for this opportunity for us to engage with you, our clients, because you are the center of what we are about, and we need to come up with innovative, relevant products that you find useful as you progress and interact with banks going forward. Thank you so much.